Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look on the gold market once again. So market actually can't move in any direction by far, standing whole week in a tight range, showing very choppy price action on intraday charts and make it difficult to make any trades even on lower time frames on hourly chart, on intraday charts. So we have tried to discuss some stops that have been formed recently, but we either haven't got the entry point or the setup was cancelled by the wide swings that have been formed recently in the opposite direction. And since we don't have any directional patterns on the intraday charts, it's makes very tricky the process of the trading. So we discussed and said that if you're trying to trade the trend direction, it's always a bit more difficult than dealing with the clear patterns that we have. In fact, overall situation stands relatively simple on a daily chart. The problem is that if you trade on intraday charts, it's difficult to you to place proper stop order relatively near your entry, because if you will place stops based on a daily picture, so you will have to place it below this area, because trend stands bullish. This is upward action, this is retracement up after upward action, and this context with this retracement will be valid until market stands above these lows. Only total erasing, breaking all levels on intraday charts and turning daily trend to the bearish will cancel this trading setup. But the problem is that if you're trying to deal with this on the intraday charts, the stops that you could place stands too far from your entry point for intraday purposes. So because you set the nearest standing targets, and it will be not positive to you, the risk reward ratio. And that's make additional difficulty for trading. So that being said, currently guys, actually this setup stands valid, but there are some moments exist that makes me stay aside currently from taking the new long position by far. First of all, it's of course the non-farm payrolls release. So we don't know what will happen. Market expects somewhere 500,000, 600,000 new jobs. We will see what it will be, but on the interest rates, let's take a look at that. Market is turning to the XOP. As I said in the beginning of the week, this is the question of time when the market will turn back to the XOP action. Interest rates are rising here. They are anticipate good payrolls report, because overall technical picture suggests that it should happen, has to happen, just because very thrusting action, very fast, small retracement. It's sooner rather than later, but market will have to go to XOP target. And now this time has come. Correspondingly, this action on the interest rates are pressing on the gold. And if you'll take a look on the intraday charts, on the fall time frame chart in particular, you could see that the price action, despite it has made a lot of attempts, despite that we have here long shadows here on the daily chart, it still wasn't able to pass through it and break it to the upside. And now the overall type performance is taking the shape some kind of the, as you can see, diamond or something of that sort. But actually, not the shape of the price action is important, but take a look here, we have few grabbers. The bearish grabbers, it means that every attempt that market could try to break trend and trying to go higher or have failed. And this is bearish in the short term, especially on the background of the rising interest rates. That's another reason why I do not want to buy right now. So it means that here we could get at least, as I suppose, this one performance somewhere to the 1740 area that we suggested initially. If you remember, we considered this area. So this next level that we could consider for taking long position from the perspective of the daily setup. But with this 1740 entry, I also think that we should not be too hurry. It's because this will be under impact of the payrolls report, and the fact that market hits the 1740 doesn't mean that we should take position blindly there. So because it could be a very strong downward action, for example, in this way. In this case, of course, we should not consider any long position by far. And diamond pattern in general, it is friendly shape, let's call it in this manner, for any bearish performance. So that's actually what we have currently on the table. Yes, theoretically, as market stands in consolidation, theoretically you could suggest opposite patterns. For example, on the hourly chart, as we said, it might be the butterfly, and the chances for butterfly still exist theoretically. But with the taking into consideration other reasons, other driving factors, we make the conclusion that the bears currently have more points than the bulls. Well, and that, despite that theoretically everything could happen, and you could try to gambling on the payrolls, if you suggest that it should be bad, you could try and take the long position based on the possible upward breakout. But this will be not quite technical analysis. This will be some kind of the gambling will be in this decision. So that's actually what we have currently on the gold. So in fact, you have only two ways. So you either wait for a clarity and taking into consideration all the stuff that we have just discussed with the interest rates, with the performance of the fall time frame chart, diamond shape, and so on, or you just trying to follow the daily setup that we have and trying to anticipate the payrolls numbers and blindly taking the positions with the stop somewhere below these lows. So this also could be done, but as you understand, the second scenario you always not at your control. So you could take position, but you can't make impact on it. So that's why we think that for us is better solution is just to wait for payrolls and then see what will happen and make the decision after we have all information on the table.